1 work together, we're going to start to create T accounts for various accounts. So for this work together problem, we need to create a T account for all of the given accounts, which there are 7 listed for us on our screen. We need to determine which side is the debit side, which side is the credit side, where the normal balance is, and which side increases, and lastly, which side decreases. Cash is an asset account, so therefore we know that the left side is the debit side, making the right side the credit side. The normal balance belongs under the debit, and it is also our increasing side. Therefore, the right side, the credit side, will also decrease. For accounts receivable, Christine Kelly, she is also an asset account. So we will follow the same steps as we did for cash. Debit here, crediting, normal balance, lastly increase and decrease. Supplies. Supplies, again, is an asset account. So we'll follow the same steps as we have for the cash and the accounts receivable Christine Kelly. If any of this is confusing to you, you can refer back to page 30 in your text. It breaks down assets, liabilities, and owner's equity and how their T accounts belong. Continuing on with our supplies, we do our debit and our credit, our normal balance, and our increasing side, and our decrease. And lastly, for this column, we have prepaid insurance, which, you guessed it, is yet again an asset account. So we're going to follow the same steps we did for cash, accounts receivable, and supplies. Debit the left, crediting the right, normal balance, and increase and decrease. Now, over here on the right, we have some different accounts. We have accounts Payable-Miller Supplies. We know that any payable account is a liability since it is something that we owe on. Setting up this T account is slightly different than the asset accounts. Our debit side is still on the left. Our credit side needs to belong on the right. Now, our normal balance side is going to belong under the credit now, which means our decrease side is over here and our increasing is on the right. Now we have the same thing, another accounts payable account, just a different company. So we'll take the same exact steps as we did in the previous problem with Miller Supplies. Debit, credit, normal balance, and decrease, and increase. Oops. And lastly, we have Jeff Dixon, who is our one and only capital account. So Jeff Dixon is the owner of the owner's equity account. Therefore, it's on the right side of the accounting equation and has a normal credit balance, which is the right side. So we put in our debit, we put in our credit. Normal balance belongs under our credit, and decrease and increase. So looking back at 2.1, you can see that all of the asset accounts have the same exact debit, credit, normal balance, and increasing and decreasing sides. Same for the accounts payable and liability accounts. They follow the same steps. And once again, if you're stuck with this concept, refer back to page 30 in your text. It gives you a nice chart with increasing and decreasing arrows, and it'll help explain this a little bit more in detail for you. Good luck with 2.1 on your own.